Good evening, ladies and gentlemen. I'm Hiran Samarasinghe, Head of IR for Sunshine Holdings. On behalf of the team, I would like to welcome each and every one of you to the fourth quarter results webinar for the financial year FY23, which just concluded. For some ground rules to start with, so this webinar is recorded and then we will upload it into the IR page for future reference so that everyone can access. All participants will be muted initially, and then once the presentations are done by the CEOs, we will open the floor for Q&A, and you can either unmute yourself and ask the question, or you can post it in the chat box. So we will take up and moderate accordingly. Next, I would like to introduce my team here who is sitting with me and also joining us online from multiple locations. We have Mr. Shyam Sathasivam, who is the Managing Director for both Consumer and Healthcare. We have Mr. Arunaditya Kumar, who is the Group CFO. Mr. Shantha Bandara, CEO for the Pharma Division. Mr. Sandhan, who is the CEO for the Medical Devices and the Pharma Manufacturing Business. We have Mr. Sanjeeva Sarnapala, who is the CEO of the Export Arm. We have Mr. Parman Nizar, who is the General Manager for Sunshine Consumer Lanka. And also Mr. Binesh Pananwala, who is the CEO of Atawal Plantation and also looks into the dairy business. So without further ado, I'll jump into the corporate announcements. Starting the year off in April, we acquired Sunshine Tea, which is the current export arm of the group, for 1.44 billion. So this gave us USD revenue in time of much need because majority of our businesses depend on imports and highly dependent on buying dollars. In May 2022, we did the share swap via a private placement. This was to buy out the stake which was given out to Akbar Brothers, which was 28%. This was during the merger about another year and a half back. So we bought the entire stake outstanding at Sunshine Healthcare, so making it a 100% subsidiary. And we paid in shares of Sun at $60 per share, and that works out to about 8.8% stake in Sunshine Holdings, which currently Akbar owns, which making them a significant minority shareholder. In September 2022, given our strategy to focus on upstream, we divested the smaller branded business in the dairy space. The brand was called Pride of Lonak. We disposed it to Ross Dairies, who is taking it forward now. In May this year, Fitch affirmed its rating of AA+ on Sunshine Holding with a stable outlook, which was the same rating that we enjoyed last year as well. So that's positive. And also during the last board meeting, first and final dividends of ₹1.15 per share was declared, and this is to be approved at the AGM coming up in a few months, next month. With that, I would like to jump to the next slide. Just to update on the corporate governance side, I think some of you are following the announcements would have seen some resignations and new appointments. So in terms of resignations, Mr. Harsha Bevikrama resigned after serving his 9-year term as an independent director. So 9 years is the limit for the independent director. And Ms. Shalini Ratpathe also resigned during the year. Additions, Mr. Fayab Akbar Ali joins the board as a non-independent but non-executive director. And also Mr. Riaz Miula, who was the former KPMG head for Asia Pacific, joins us as an independent director to strengthen the whole governance aspect of it. With that, I would like to hand over to Shyam to take you through the group performance. Shyam?
Sure. Again, good evening to everyone, and thank you for all being here with us as we announce our fourth quarter and financial year results for Sunshine Holdings. Firstly, fourth quarter results, as you can see shared on your screen, we had revenues of 13.3 billion, primarily driven, of course, by healthcare, which is our largest contributor at nearly 47%, followed by consumer, which is now a mix of both the domestic tea business and confectionery, as well as our export business, and then agri. These are three segments within our group. Overall, a nearly 60%, 65% increase over the same period last year, of course, driven by price increases across healthcare and consumer, because the volumes, as you will see as we go through the presentation, have been challenged during the year. The quarter had a net loss. This was to do with significant adjustments to do with deferred tax, etc., which our group CFO will take you through. But broadly, we managed leverage. This was a point of concern through the year, as cost of capital was quite high. While it has increased because we've done the acquisition of the export business, overall, it's still below where we think we want to be in order to maintain our ratings. If I take you through now the annual results, the financial year, you will see we've had a 61% growth in our revenue at nearly 52 billion for the entire Sunshine Holdings Group. This is significant growth in revenue, driven, like I said, by price increases across healthcare and consumer. But we've also been able to fix issues in margins, etc., at the same time. So what you're seeing is an improvement in terms of EBITDA. Of course, there have been some challenges in EBIT as we couldn't pass on all the pricing, especially in the consumer business, to consumers because of the raw material prices versus market acceptability or affordability at this point in time. Overall, our PAT for the year is lower than last year. We're nearly 27% off. This, as I said, we'll go through in terms of between, you will see EBITDA at nearly 22% higher. We've had lots of charges come in deferred tax and goodwill impairment, etc., which our group CFO will take you through. So that's what's brought our EPS lower for the year in terms of overall results for the business. You have some explanations of some of the feedback in each of the subcomponents, but I think as we take you through each sector performance, you'll get a better idea of the results. If I take you to our adjusted performance and ask our group CFO, Aruna.
Thank you, Sham. Good evening, everyone. Actually, we have recorded a profit after tax of 3.6 billion, which included, as our MD explained, there are mainly two adjustments. One is deferred tax adjustment. As you all aware, corporate tax rate has been changed since October last year. So we have to adjust the deferred tax accordingly because tax rate changes impacted on each company differently. For example, Agribusiness, you can see total overall impact on deferred tax is 522 million. That is mainly because of their asset base is high. And the rate change impact is almost 20%. So likewise, each business unit has an impact on the deferred tax. And also a discount factor on the retirement gratuity valuation. That's also, there are some reversal which comes as a implication on the deferred tax as well. So those are the main reason for deferred tax. In addition, we have impairment of goodwill. Prudently, we have impaired the goodwill which was carried in our balance sheet for last 2 years. So partly we have impaired based on the future projection of the cash flows. So with that adjusted profit after tax, if you take off the recurring non-recurring entries, it's 4.6 billion versus last year 4.9 billion. There is a slightly lower than the last year profitability for the group. Thank you. Shanta, you can take over. Yeah.
Thank you, Aruna. Good evening, everyone. In healthcare, let me quickly give you a snapshot on the segmental split in our healthcare sector. Of course, the pharma business is the largest, including the distribution, which is about 68%. While medical devices actually have over the last few quarters have improved to become 18%, and our retail front is 9%, and the manufacturing is about 5%. Also, the asset split almost the same sort of allocation, where pharma takes the largest part in the asset base allocation, while medical devices is more in terms of the asset allocation because of the nature of the business, and also the manufacturing has a asset allocation of 14%. Moving on from that quick snapshot on the segmental report, let me take you through the healthcare sector performance. For the quarter, we reported a 6.2 billion revenue with a 38% overall growth, which largely coming through the price increases that was in line with the dollar increase that took place towards the first 2 quarters in the financial year, still coming into the Q4 compared to the previous year quarter. The EBIT margin largely is driven by the GP improvement that we had during the year in every quarter due to the price adjustment in line with the exchange. And also the cost improvements we did in all our businesses have actually given us a better PAT for the year. I may not touch upon the adjusted PAT due to the goodwill impairment and the deferred tax, which Aruna already have mentioned. And the overall year, we had a PAT increase of 13% for the healthcare sector. Moving on from the financials, a quick snapshot on our market information, especially in the private market, where the pharmaceutical business, which is the largest in the healthcare sector, how it's faring. I think every quarter we have been discussing, we have been holding on to our market share largely in a very turbulent quarter as well, and have been able to keep up our growth higher than the overall market growth. So therefore, securing the market share in the quarter as well. Moving on from the market share information to the next slide is a quick sort of a recall, how the price increase index, how it was aligned actually with the increase in the dollar, where largely during March, when the dollar actually went very high, where the rupee depreciation took place, the pharma gazette and non-gazette also approved a particular level of price increase so that we keep up with the dollar increase in the market, where these businesses, mainly pharma and medical devices businesses, are largely 100% import-based businesses, where highly sensitive to the dollar increase. With that, let me hand over to Sandan to take you through the medical devices.
Thank you, Shanta. So, ladies and gentlemen, as you can see, the medical devices, which is a hospital-dependent business, because we largely cater to the government and the private sector hospitals, had a lot of turmoil and challenges. And some of these figures, which you can see on the screen, tell them all, because what you see in the blue line says the hospital occupancy, which had been going up and down, and there have been fluctuation throughout the quarters. And since we deal largely with the lab diagnostics, you also see the lab test, how the movement had been. And we saw in the last 3 quarters, it had been gradually going down, specifically in the government and the private sector. And even the operating theatre utilization, we saw the figures coming down due to the current economic crisis and affordability. And we also saw a shift from the private sector to the government sector. And even in the government sector, some of the key indicators or the key the surgeries were getting postponed. But in spite of all, the medical devices came out with a stellar performance last year, did very well in spite of the market conditions. I would say Sunshine Medical Devices had a 38.9% revenue growth over the year. And also the revenue increased by 25% in the last quarter. So it was a splendid year. And also the big agencies, especially in the diagnostic like Siemens and GE, performed beyond expectation. And even the surgical agencies like 3M and Johnson & Johnson performed above the expectation, which allowed to come out with the high contribution and high results for the medical devices. Moving on to the retail sector, I will also give you some update on how our retail sector has performed. And here, as you can see, there have been a revenue degrowth, especially largely contributing to the economic situation, a 6% drop on year, which also we saw a reduced footfall. So from the last year quarter compared to 269,000 footfall, we saw that coming down to the Health Guard to 211,000. So which reduced the footfall to the Health Guard outlets. And also we saw the footfall, the people who come into Health Guard, there have been a reduction in the wellness purchases. So between the pharma and the wellnessers, wellness contribute a higher GP. And we saw the plans who come into Health Guard had reduced their purchases, but we saw the loyalty customers engagement improving in the Health Guard outlets. So this adjusted to the new normal situation of the habit where we got used to these results. And also the best thing which happened in the financial year is we added another Health Guard outlet. So earlier we had 13 outlets in the city of Colombo. So now we opened the 14th branch in Bambalapitiya in May 2023. So these are some updates in terms of retail. And with that, let me move on to the manufacturing segment of Sunshine Healthcare, which is the Lina manufacturing. And as you can see here, it had been a turnaround year for Lina manufacturing, where the business recorded a 1 billion revenue. From the 615 million previous year, we crossed the 1 billion mark, especially the performance coming from the private and the government sector. And one of the key achievement of the business of Lina manufacturing had been last year, we commenced the MDI, and Lina is the only manufacturer in Sri Lanka, the pioneer and the only manufacturer of metered dose inhaler. So the metered dose inhalers which got approved, we not only started manufacturing, we also sold to the government and the private sector, which helped us to grow. So this was a turnaround year for Lina manufacturing, making operational profit. And we also now upgrading our lines for better utilization, for more revenue, so that this year the performance is going to be even more higher when it comes to the Sunshine Healthcare, the manufacturing arm. So with that, I will hand over to take on to the consumer sector.
Good afternoon, everybody. So let's take a moment to look at the consumer business. So in the year that we are talking about an achievement of 19 billion. And that is actually split between the domestic business and the export business. You can see that the export business accounts for about 42%. The domestic business is between the tea sector and the confectionery. This particular split that you see is a split that we've maintained even last year. Both sectors are growing aggressively. On the right, we have the total asset split, slightly different to what you see in terms of revenue. On the performance, like I mentioned, we had a good growth. And what I'd like to mention in particular is that the revenue growth comes from all three sectors. The Sunshine business, the export business grew by 70%, the tea business and the confectionery business 30 to 50%. So it's a wholesome growth across the three sectors. The impact in terms of profit is something that all of us are aware of. The change in terms of the rise in cost of goods, raw material prices going up, electricity prices going up. All of them have had a significant impact, and that is the consequence in terms of PAT margin that we see. Between the two sectors, you can see that the price growth that we've taken for tea was steeper in terms of 105%, and confectionery was 61%, and that led to the high growth in tea. Also, that is because part of confectionery growth happened the previous period, previous to this particular quarter. And that is why we were unable to take a major increase in the quarter that we are concerned here. In terms of volume decline, this is partly explainable because the category itself also declined. In both tea and confectionery. During the period concerned, the confectionery drop is more versus tea, which is an essential product. If I go into the next slide where we talk about the prices of goods. So here you see indexes. These are not prices, these are indices. So the blue is the cost of tea that we buy from the auction. The orange one is a price, is indexed on the price, the MRP that we sell. So you could see that the price increase that we have taken, being a consumer market, was very sensitive to consumers being detracted from a big price change. So we can't take a big jump in terms of prices at once. So we had to take a step approach. That was also because we wanted to make sure that we manage, our market share performance. If we go to confectionery, however, we can see that we were slightly more bolder in taking the price increase. Also, it is because of the fact that confectionery unit items are nominally priced. So sometimes the change in 2 rupees or 4 or 5 rupees can actually give a step jump as a percentage. From a share point of view, what you're looking at here is the share that is given to us that we buy from Peppercube, which is a retail tract. It is a trade market share. It captures the general trade. It's called retail measurement services. The green is actually Ekaterra. The orange is Sunshine Consumer. You can see that we were in the realm of 41% for most of last year. And then this Q4, we had significantly grown to 45 to 48%. And proportion in the same breath, you can see Ekaterra actually declining. One of the reasons for this is the disproportionate price increases taken by the two companies, and therefore, the consumer reaction. The same thing is visible in terms of what we call confectionery. However, there was another challenge in confectionery. The gold is Sunshine, the blue is Perfetti. Perfetti was actually not only partly present during Q3. Subsequent to that, they actually entered the market pool in Q4. But the bigger reason for this high value share climb that you see here is because they took a significant price increase to counter the economic challenge. And that actually led them to have a higher value share. Yes, it does come at a volume share loss, but the value share gain is noticeably high. The last slide. Yes, okay, fine. So, and the next slide. Okay, Sunshine. Okay, so with that, I actually hand over to my colleague, Sanjeeva, who will actually talk about exports.
Good evening, everyone. From the export side of it, we saw a decline in exports in the Q4. This was mainly due to the economic downturn we see in US, Europe, and also part of the Middle East. From Sri Lanka itself, the production was down by about 8%, which reflected in Sunshine Tea exports as well, around the same percentage drop. We also saw a revenue drop for us in the Q4. We saw a growth in revenue, about a 46%. However, we see that the situation in the Middle East and in other regions didn't improve in the Q4, which was a spillover from the Q3 of which we saw as a decline. Taking into account the exchange, the corporate tax, and also interest rates affected the Q4. The Q1 of 2023, where we see the same trend that the demand for tea has dropped mainly in the Middle East, Europe and the US markets. whereas China and Japan seems to be maintaining the same interest that was seen in the third and the fourth quarter. Thank you. And I pass it on to Binesh for his presentation.
Thank you, Sanjeeva. Good evening, everybody. I will cover the agri sector, which comprise the palm oil business and also the dairy, which the revenue split of dairy is about 14%, and also palm oil is the holding company of dairy, holds about 86% of the revenue. In terms of the total asset split, it's a different. Palm oil holds 65% and dairy 30%, and also the other areas which we have come into with the growing of maize, etc. Support the dairy industry comes to about 5%. Going on, I'll go on to the performance, the highlights for the agribusiness. First, I'll start with the quarter. When you compare with the Q2 of last fourth quarter versus the Q4 of the current 2023, there is a growth of about 47%. And also that when it comes to the revenue on the to date on the financial year, again the company has grown by 35.4%. Primarily, this is coming from the increases in the palm oil, which maintain a good price throughout, and also the dairy, the milk price is going up. So these are the main two reasons. Apart from that, the about 5.7% crop increase during the year in the palm oil sector also made contributed for higher revenue during the year as well as for the fourth quarter. But however, the GP contracted due to mainly taking higher crop of bought crop or the oil palm crop. But main contributor was mainly the higher cost of fertilizer and also to cover up the fertilizer availability last year, which we had to fill it up to the current level. And as a result, the fertilizer cost was much higher during that had a impact on the cost of sales. So oil production have been quite good in terms of the Q4, which is about 54.2% year on year, and also the subsequent growth. So the palm oil in the revenue contributed for 44%, and also the dairy contributed for 69% increases. But it has been a challenging year for the dairy business, mainly due to the price increase in the feed cost and also availability at the beginning of the year. Availability of the feed was a main challenge due to the agri policy of the country. However, it is getting ease off as of now, and the price of feed is coming on. Most importantly, the availability of feed is much better than what it was last year. Then I would not go through the impairment and also the deferred tax, the provisions which have been made mainly in the Q4 and which has an impact on the today. I'll take you through on the palm oil prices. As you see that like the prices have been very good at the beginning of 2022, and currently it had dropped to around $700 in the world market price. And we see for the next couple of months also in this same range. These are due to two reasons. One is the crop in the world crop is high, and also in the Sri Lankan crop also is higher than the last year. And also it's higher than the third quarter. So this is the one reason for the prices to come down in the palm oil. In the dairy business, again, the good news is the prices are being maintained due to the shortage in the shortage of milk in the market, which we can see, though there are certain restrictions in importing, still the prices are maintaining, and also there is a shortage of good quality single source farm milk. So as a result, that we can maintain the same levels. But in terms of the volumes, when you compare with the fourth quarter to fourth quarter, it's almost the same production levels. But these are dropped from the third quarter. So normally these are the milk impact in the dairy business. With that, now I will hand over you back to Hiran to take it from the rest.
Thanks, Vinesh, and thank you everybody for that insightful presentations on each of your businesses. I think let's move on to Q&A. So I guess we can do it in two ways. Obviously, you can send it through the chat box as usual, or you can ask to be unmuted and we can accommodate from this end. Sorry, Shanta, can you take the question on gazetted farmer prices?
Okay, I can take it in the meantime. So yes, definitely there's been conversations with the Pharma Chamber, the Sri Lanka Chamber of Pharma Industry, SLCPI, and the Ministry of Health in terms of given the appreciation of the rupee, that there will be some adjustment to the formula. The last price increase we received around May last year adjusted us to about 350 to the dollar. It did not go all the way to the 380, 390 levels, etc. So that's the conversation we're having. Of course, the industry is also pushing back on adjusting on the basis of energy costs have also gone up significantly, which weren't in the formula before. And the fact that we don't have a proper formula in place beyond the dollar rupee exchange rate, and because we need to take in other costs. But we expect anything between 10 to 15% imminent as a price reduction gazette to be announced.
Thanks, Sham, for that description. Niruksha, I hope that answers your question. I think many of you be having that same question. Moving on to the next question from Harushi. I think Vinesh, this is for you on fertilizer. The fertilizer prices have cooled down during the quarter, apart from stocking up and high prices of broad crop. What else has impacted the agri margins during the quarter? Why is there a significant drop in fair value of biological crops during the quarter?
Yes, so I think the fertilizer prices have eased off in the last quarter, but some of the fertilizer which was bought during the third quarter also was on a high value, which was applied during the quarter. So that was one reason for it to be higher. Apart from that, for the quarter, the deferred tax and also the impairment also had an impact on the quarter results. So which is which had a impact on to date as well. Hope I answered the question.
Thanks, Vinesh. I think just to clarify on the biological asset, I think both at the farm, the biological asset, which is the cows, and also the timber valuation is lower compared to last year. And I think that is what you are seeing as a drop in the fair value. Hope that clarifies. We have moving on to the next question from Shalini. Can you give an age-wise breakdown of Wata's palm oil plantation? I think we can roughly mention the average age, if that's okay, Vinesh.
Yes, roughly we have about 44% of younger age, and also that we have about declining stage or the older age, which is more than 17 years, we have about 30%. So the rest all are in the prime age category and which will maintain for a while.
Thanks, Vinesh. Shalini, hope that answers your question. If there's any more questions, you can post it on the Q&A chat and we'll take it up from this end. Okay, we have another question on agri from Isuri. Vinesh, hope you can answer this. So the dairy segment reported another operating loss of 125 million compared to the other operating income reported in the last quarter. So the question is, why is that and what is included in the other operating income?
Yeah, so the other operating income is mainly coming from the growing of feed and the other crop which have been there. So apart from the dairy loss, so that is the one which had come out in the other crop. Hope I answered that question, Hiran.
Thanks, Vinesh. We have another question from Tarushi, I think on consumer. Some confectionery manufacturers have hinted a price benefit of 15%. So any insight on that?
Sure. Yes, so this is primarily from the Lanka Confectionery Manufacturers Association, the LCMA. This is the broadly confectioneries break up into three categories. You have sugar confection, which is the hard boiled candies, the toffees, that's what primarily dainty is in. Then you have the chocolate confection, which is Ritzberry, Candost, and all of that. And thirdly, you have flour confection, which is all things biscuits. So primarily the price decrease is coming from the flour confection category, which is the largest space in the macro confectionery space. So that's where you're going to see the price reductions that they have announced. We have yet to see raw material drops in sugar and liquid glucose for the thing. Only thing is the sort of the rupee appreciation will help, but not yet because of stocks in hand. And sugar prices from a commodity price are still inching upwards because there's a shortage in India as well. So we still will wait to see that play out in the sugar confection and chocolate spaces.
Thanks, Shyam. Moving on to the next question from Shalini. I think Sandan, you maybe will take this. Question is, could you explain the progress of pharma contract manufacturing and how are the payments coming through for government buybacks?
So when we refer as contract manufacturing, what we mean is that we manufacture for other organization, which is going on well. But when it comes to government manufacturing, yes, most of the time, if you take last year, we got the settlement between 90 to 120 days. And the last payment was the bond issue where rest of the debtors, which was at 90 days, we got collected. So the year end, we didn't have any debtors above 90 days. So for local manufacturing, we are given a priority. The Ministry of Health encouraging the local manufacturing where the payments are made on time. I hope I answered that question.
Thanks, Sandan. I think moving on to the next question from Vidula, I think again on the agri side. Any particular plans for the declining stage palm crop or trees?
Yes, so at the moment, the declining stage and 100% harvesting is being done, though the declining is there until the palm oil ban is lifted. So once that is done, we are ready to go ahead with the planting in the future. So the first that we will uproot is the declining stage and the taller palms.
Thanks, Minesh. I think the next question is on consumer, and maybe Aruna can help us with this. What is the effective tax rate for consumer sector? Both 3Q23 and 4QFY23 carry deferred tax impact in consumer sector. Yes.
Yeah, Hiran. Actually, effective tax rate for consumer sector was approximately 18 to 20% last year, the same quarter. And the current, if you take alone the current Q4, it's 30% effective tax rate. So the difference we have adjusted through the deferred tax as well. And also the company tax expense also have gone up slightly because of the rate changes.
Thanks, Aruna. I think that's clear. Isuri, hope that answers that question.
Hiran, there is a question on the chat box, which I'll take it. the palm oil price, the current price is 3,700 ringgit per
Okay,
ton, and also yeah.
sorry, I'm just seeing that.
The increase is that basically the current local price is 600 rupees. This is coming with three components. One is that the world market price plus the commodity price, that which is the duty price, which is coming in about 250 rupees per kg, plus the freight. So that's the reason for it to be higher when you compare with the world market price. Hope I answered that question.
Thanks, Binesh. Then I might move on to the next question from Trisha. The question is, do you have any particular expansion plans in any of the segments that have been on hold due to high interest rate economic volatility? If so, could you elaborate on the areas for expansion and the tentative timelines?
Sure. Yeah. So clearly, I think what we held back was on CapEx, primarily. One is in our pharmaceutical manufacturing. We have plans for further CapEx. Now that we have a little bit more of a stable sort of background, and we see interest rates dipping. So that's one stage. We also, in the healthcare business, in the agency business, we will invest significantly in our warehousing. As we upgrade, we've probably missed a cycle in the last year and a half or so, both the COVID overhang as well as economic crisis. Hopefully now we'll get on with that. In consumer, we hope to introduce more new products, especially in the confectionery. So again, some capex there. Macro market, still hard for us to read in terms of investing in inorganic at this stage. So right now it'll be all organic expansion that was probably put on hold in the last year or so.
Thanks, Shyam. I think, Trisha, I hope that answers that question. I think the focus is mainly on organic right now and strengthening the business there. I think if there's no more questions, we can wrap up this session. So yeah, it's almost time. So on behalf of the Sunshine team, thank you everyone who participated and engaged with us during this session. Hope we were able to answer all the questions that you have effectively, and now we have a better picture of our performance, both 4Q and the financial year which passed FY23. So hope to see you next quarter as well. Thank you and have a good day.
Thank you.